Natural gas surged 2.5% on Friday, closing at $3.33. The rally was driven by short covering following forecasts for warmer conditions across much of the U.S., which are expected to boost demand for electricity generation and, in turn, limit next week's storage build, providing some short-term bullish support. However, the latest 14-day outlook shows below-average temperatures across the Midwest and East, with widespread highs in the 50s to 70s and even cooler spots in certain areas. While the West remains hot, strong solar output is reducing reliance on gas-fired power. As a result, overall U.S. demand is expected to stay soft, capping the potential for sustained bullish momentum. Over the 4-week period from May 17 to June 13, storage levels are projected to increase by 394 billion cubic feet, which is 39 billion cubic feet above the 5-year average and reinforces a bearish longer-term outlook. Meanwhile, I've noticed that the U.S. market has largely shrugged off what appears to be a fairly bearish development. LNG Canada has completed the cool-down phase of its liquefied natural gas facility in Kitimat, British Columbia, and is preparing to begin production in June. The project's initial export capacity is 1.8 billion cubic feet daily, with plans to potentially double that to 3.68 billion cubic feet daily in a future second phase. This incoming supply will effectively offset the volumes added by Corpus Christi LNG, bringing market fundamentals back to where they stood in November 2024, before Corpus Christi began operations in December. The intensifying competition in the LNG market could accelerate the growth of the storage surplus. As evident from recent trends, the rising storage levels during March and April closely align with movements in the price chart. If exceptionally hot weather doesn't materialize across most of the U.S. in June and July, rising storage inventories could dampen the current bullish sentiment and potentially push prices below the $3 mark, contrary to the EIA's projection of a move toward $4. From a technical standpoint, the weekly chart shows the market in a state of indecision, awaiting clearer updates on supply and demand dynamics. A break above the $3.50 level could signal additional upside, while a drop below the 50-week moving average may point to further weakness. Please like, subscribe, and comment to support the channel. See you in the next one.